Hello.
Can you hear me now?
Yeah, hey John, how you doing?
I'm good. How are you?
Hey, pretty good. Let me get my video on so you can see me here.
All right.
Yeah, thanks for signing up. You're the first of the folks to sign up for coaching, so I appreciate it, man.
Oh, that's okay. I enjoy listening to you. I'm still learning a lot.
Yeah,
Have a long way to go, but for one-on-one with somebody like you, it's hard to pass up.
yeah. There's a lot to learn. A lot of I guess good strategies. So you're up in Golden. I've never been up there. How is it up there?
It's awesome.
Yeah. Where
Yeah,
is it? Where's it relative to Denver? I mean, I'm in the Springs down south. I think Golden's
Golden's
northwest.
west of Denver. So
Hmm.
if you go due west out of downtown Denver, you'll go up through Golden, and then you can go up. There's a highway that goes across to Netherland and Blackhawk and all those. We're just to the east of that.
Okay, that sounds good. Yeah, we used to
Yeah.
go to Black Hawk for poker now and then, but it's been a few years. So,
Right.
hey, so let me ask a question. Let's see, one thing I can offer if you want. Uh, let's see, how about if you're interested, I can do this for half price. I give you like $100 back if it's okay if I use this as an example on my website for how a coaching session goes or highlights of it with your permission. And if you don't want to, that's fine too.
No, that's fine.
Um, okay.
Yeah, I'd be fine with
Yeah.
that.
Okay, cool. Yeah, something for both of us. So cut your price in half and gives me some good content to put out there for people to see what coaching with me is all about. So
Sure.
appreciate it, man. Let's go ahead and get this video opened up here. I'm still relatively new to Zoom. It's
Oh, that's all right. I totally get it. I'm not. I use it for work periodically, but
yeah, I used GoToWebinar for like 10 years. Zoom just last year. I was trying to get this picture open up a little larger, but well, okay. Okay, well, so I wanted to welcome you to our coaching session today, and let's get started by maybe just let me know a little bit about yourself and what are some of the challenges you have, or some of the big things you're hoping to get some answers on in today's session.
well, I'm a basically a swing trader. I still work, and so my time with the market is somewhat limited. Although my work schedule gives me a couple months off in the summer, so I have more
Mm-hmm.
time to do things then. But like I said, I'm still looking at trying to swing trade versus doing it as a day trader.
Mm-hmm. Okay.
Someday down the road when I'm retired, I plan on doing it at full time, but until then.
Yeah, well,
um,
that makes sense. It's you know, a lot of folks are not able to be in front of the monitors for hours a day or whatnot. So, let's see. So, if you wanted, so it sounds like you're mostly swing trader. We can change the charts over to swing trading charts. Let's see if that would be better, or at least the dailies, and use that to start with, and then we can look at both. So tell me, what are some of the things that you wanted to, I guess, problems that you're having or challenges that you wanted to overcome? I've been doing this a lot of years. Hopefully, I can give you some ideas in terms of, it, because I've been through a lot of the before, after, before I did this, and then I learned. So, what are some of the challenges that you're running into, or things that you'd want to pick up some ideas on?
well, learning entries and exits and being more precise about it. I've worked on being learning how to read charts.
Hmm.
Although I don't use a very sophisticated software, I use stock charts, which has daily charts.
Right, right.
Um, um, I also had a question about volume, and I've followed other people in the past, and there's been discussions about stocks going up on low volume usually don't stay up for very long, and I'm trying to get a better handle on how that works.
Yeah, good point. Yeah, stockcharts.com is outstanding. It's the best the online charting software that I've seen. So it's you're in a good place. That's good. I guess to start with, one of the minimum volume criteria I have is at least 1 million shares per day average volume. So like a chart like this is fine, right? But So anything that I trade, I always want to have at least 1 million shares or better per day. So that's on the daily volume. That's one criteria to put as a filter. It must be greater than 1 million shares. So that should keep you out of the low volume chop charts. The other thing is look for 3 days in a row with increasing volume is always or usually a very good breakout signal. So if you have increasing volume over a 3-day cycle of at least 1 million shares per day, that often leads to a nice continuous move up. So,
Okay.
do you have a chart, for example? Any favorite charts that you've been swing trading lately we can look at? And I can.
Well, I've been following, I listen to you 2 or 3 days a week as much as I have time for. And I know I've made money the last time on UVXY.
Right.
I trade in a Fidelity account. One of the issues I have is I will trade that stock over a couple of days and then try to go back in and they give me the notice that says I can't trade it until the next month because of the wash rule. So I'm still trying to understand that.
Mm-hmm. Yeah, well, the watch sale rule is all, how to say, there's different ways to set up your account for handling watch sale. I do whatever the default was, so it's not an issue, or at least I've not run into that. One thing that traders do run into, though, is using settled versus unsettled cash. If you do a day trade, for example, and using a cash account, you can't re-enter unless you're using settled cash. So that's one thing to consider. But if you use the default setting for the account, usually the wash sale is not a concern. One thing that I did learn about wash sales is very important is don't trade anything. Let's say you trade throughout the year. Don't trade anything in January that you traded in December. That's the only thing that the most important thing I learned. So if you trade up until the end of December, you can't trade any of those same instruments till 1st of January, and that avoids a wash sale problem. But well, let me. How about a stock chart? Is there a stock chart that you traded recently that maybe we could pull up?
FAZ. I've still been trading the 3-to-1s.
Right. Right, and it looks good. It did a really good run up here. It's kind of pulled back. For example, one thing that I find useful is to use like a 2 or 3 day rule. So if you're in a chart and it goes above the previous day's high, you stay in it as long as it does that. If it goes below a 2-day low, then you start scaling out. So FAZ is kind of in the middle here. Now I would go, for example, I'd go along with a 24 with a hard stop at 22 for a swing trade. So that would be the 2-day rule. And if we look on the daily, you can see, in the 2-day chart, you can see that's a good example of this. So long signal would be over, say, 24.10, 24.20. And this is the most important thing I've learned in doing millions of dollars worth of swing trades is always use the 2-day high-low rule. So if it ends the day, not begins the day, but ends the day above the previous day's high, so if this thing goes up and ends the day over 24.10, then you go into it. You never initiate a new swing trade inside the previous day's range. Like right now, I would not buy it here. I would buy it only if it gets in over and stays over 24.10. And on the flip side, if it gets under 22, you have to start scaling out. So that's a very simple and I found a very effective way to swing trade is use the 2-day cycle. 2-day highs you buy, 2-day lows you sell. You scale in as long as it keeps going up. So
okay, that makes sense.
Yeah, it's very easy and it's very visual. It's very it's a good thing. How about another chart? Do you have another one for me?
I was watching Coin earlier, but that thing just went parabolic last.
Yeah.
And so.
Yeah, no, Coin's a good example. One never to swing trade because it's got too many points of range.
Right.
I like things that only have like up to maybe $3 or $4 worth of range. Things that have like $10 or $20, you could get a gap down like this on a regulatory action. Or I called a long for everybody the day trade here, but 63.30. But when it comes to swing trading stocks, the important thing is to focus on charts that do not have too much range or too little range. So we've been in sell-off mode in the stock market lately. So, but it's good to start off with charts that have less than $4 or $5 range on the 2-day chart. So so here's a good example of a chart that I like for swing trading, the GDX. Notice the most important thing is to first of all, look on the right side of the chart and where's the range. So it's 30 to 31 and a half. So that's a tame, I won't say safe, but it is relatively safe range. You're not going to get bit like a coin that has like a $20 range. So,
Right.
and it's in a 2-day uptrend. And as long as it ends the day over 31.20, that would be a good swing trade candidate. It's gold, right? GDX is gold ETF.
Right.
So does that make sense? Kind of a starting place?
It does make sense. Yes.
Okay. And then again, so you'd scale in every dollar or two. I like to scale in every $2 as a rule of thumb. So if I buy this into the close, and I might, if it ends the day above 31.20, then I would scale in over, say, 33. And I have a hard stop down here right under the 30. So
Okay.
that's how you build the trade over time. Yeah. All right. So next questions. Yeah, let me know, man. It's
Yeah. So I'm trying, like, I guess, scanning through stocks to find good charts, and that's the other thing that I kind of struggle with. I probably look at too many charts.
Yeah.
So trying to isolate it down to just a few is the other kind of challenge that I have.
Yeah. Yeah. Well,
and I try to stick with the ETFs now more because I've made
mm-hmm.
more money on the ETFs than I have on individual stocks.
Yeah, you and me both. Yeah, it's the challenge is, let's say we're in a kind of a down market, so it's not a good time to be like a salmon trying to swim upstream and going long equities in a down market. If you look at the S&P, we're down. So, but yes, filtering down to a kind of a bounce in a down market, but filtering the list down to a 3 or 4 is always a good idea. The two things I look at is, for example, previous range. If it's something that, how to say, one very good for pivot trades, which is not my favorite. I prefer slow moves up, then spike and go up sharply. That's the best. But for pivots, which there's plenty of opportunities for too, you want something that has had like this chart's good dust. It's the opposite of the gold one. Had a big strong move up, it came back down to support, and if it bounces, maybe good, say over 13 kind of thing.
Okay.
So when you're scanning, that's one thing to look for, is that kind of a pattern. We've got a big range that's either ran up and down and starting to pivot, or a nice steady uptrend that starts to hockey stick out. But let's see. Well, let me ask you. Riddle me this. What's your favorite personal like price range for things you like to trade? Do you have a favorite range?
Yeah, usually probably between like 8 and 16 or 8 and 20.
Mm-hmm. Yeah.
Some of the ETFs have come down quite a bit, and there's a comfortable range for me.
Right. Yeah, and that's a good range. I like that too. Somewhere between like 8 and up to 30, but 8, 15, 20,
Right.
30. I don't like trading stuff that's 50 or 60 a share, because you got to spend too much to get anything out of it. And it's not a good value, and leverage isn't good.
When
I
you
do
have
like
higher risk too.
Yeah. Things like UVXY I love right now because it spiked up, it came back down. Now is a good play for a pivot to the upside, right? It's hot. It's a good chart. Good price, good range, good volatility. It's got a lot going for it. Just like things like SOXS, even though it looks terrible down here, we got a hammer here. So long over 1920 makes sense for this. And the other thing to look at, and this is very valuable, I learned this, it took me many years, is make sure that you're looking, when you're sorting through charts, one of the most important criteria is the upside in it. For pivot charts is the upside in the range. So for example, this guy, SOXS, it's down here and looks terrible, probably good buy anywhere over 20 kind of thing. Use, how to say, from a price action standpoint, I never buy 9. So use dollar values that you think other people will be attracted to, and you don't buy right under, say, a key resistance or like 20. So over 20 would make sense. The other thing is the range. So this thing, if you expect up to 50% of the range. So if I buy 20, my exit target's going to be maybe 30, right? About half that range. Okay. Now, if I were trying to figure out which of these two charts, that one versus SQs, the SQs doesn't have as much range and it costs more. So percentage-wise, SOXS has a much better upside to it. So if that makes sense. You want things that have a big range on the recovery and good price entry. So yeah,
it does make sense. Yeah, and I know you always talk about whole numbers which I've been
Right.
trying to incorporate into following some of these and buy on buys or sells.
Yeah, yeah. And then when it comes to breakouts like this one, again, and this is valuable. It's a good intel. It's accurate. It's honest. It makes sense. Is always use 50% of the 90-day chart. That's the range, the target zone. So, for example, this thing goes from 9 to 18 or whatever. So it's got about a 9. Let's round it up to $10 range. So you might have up to $5 upside. And so you have to ask yourself, number one, is that enough? And for me, it is. If I can buy 18 and a half and sell 23, 24, that's good. It's not great, but it's worth my effort. It's $5 a range. That's
Sure.
one thing. And the other thing is, let's see, the most money you make in swing trading is always a result of scaling into winners as they go up. So you have to ask yourself, is $5 enough? Or I would say you have to plan. If my exit target is half the range, $5 up, how do I then scale into it so that I maybe start off with a couple hundred shares, but by the time it's up at 23, I'm in say 800 shares and I'm up, $700-800 on the trade. So how do you scale within the 50% range on the upside? So does that make sense?
It does make sense.
Okay.
Yeah, and I struggle with that too, because you'll watch, you'll buy a few hundred shares, whatever the stock is, and starts going up.
Right.
And I always get, I still haven't. I'm trying to overcome the getting nervous about, do I want to sell and take my profits, or do I want to let this run, and how to evaluate that?
Yeah, yeah. Well, it's always good to take profits early. I'd say the most important thing to get at in swing trading and in day trading is when to trail. How to say? Initially, I use usually no more than the $2, between $1 and $2 for the initial stop. Once it's gone up like $1 or maybe $2, I then pull the stop up to break even. So now I'm playing with the house's money. That's
Gotcha.
really critical to get that right. So once something's good, and you have my word on it, it's very important. Once it's gone up $1, $1.52, pull that stop up to break even. And sure, you'll get washed out a lot of time, but at least it didn't cost you anything. So that's important to make that part of the mix. And the other flip side of that is once it's gone up, say $4, let's say, and again, maybe it's only 1 out of 10 trades that will do that, but let's say it goes up $4, you may want to double down on it, or at least add to it, and then trail the stop up at break even for the new total position. So that works. So that's, for what it's worth, that should help. Yeah.
And that makes sense. So that's, like I said, that's something I'm trying to learn and get better at.
Yeah.
So
yeah, it's a pain in the butt, the numbers and the math and all that crap, but it's true. It's a very honest and very correct that trading is a lot more about being an accountant and being math than it is the chart patterns. The chart patterns kind of help you see if it's worth trading in the first place. But after you put on the trade, it's all about the numbers and the math. And the chart pattern should be, this is very important too. The chart pattern is irrelevant once you put on the trade. All that matters after you're in the trade is the money management. So the chart is only very much less important than you and I would have thought. Based on once you're in the trade, it's all a math exercise. The chart is very secondary. So if that helps, yeah.
Yeah, that does help. I never really thought about it like that. That's an interesting point.
Yeah, my colleague Sosnoff says professional traders don't even use charts, and he's true. If you go to Wall Street firms, these guys are trading off of tapes. They're just numbers. So
Wow.
that's kind of one extreme. I still like charts, but a lot of the more experienced folks who are doing millions of dollars worth of stuff a week, it's all numbers and virtually no charts other than the market chart up on the wall. So that should help. Yeah.
Yeah, for sure. Okay. That makes sense.
Yeah. So other questions, let me know, man. Hit me with anything you got. It's
I like I said, some of the things I struggle with, I'm in the process of trying to overcome some of my own fears. And I've watched other people and I've watched you, and it's a process. So trying to figure out that process has been the next kind of challenge that I've had. Again, looking at trying to find charts that I can trade. And after talking to you, I think, trying to narrow that scope down
Hmm.
and work with those same charts for a little while. But the market has been so crazy,
Yeah, yeah.
it makes it a little more difficult.
Yeah, it's tough for swing trading right now because things are up and down, right? You're right, it's zigzag up and down.
It is.
One thing, I don't know if you in my Saturday sessions, but we always go through that list of tickers that everybody throws
Yep.
at me, and I narrow it down like the top 3 or 4.
Yep.
Hopefully that exercise helps. The cleaner the chart and the wider the range of the chart, the easier it is to trade, right? So the choppier and fuzzier and up and down it is, the tougher it is to trade. So yeah, now's a tough time to swing trade because things are going up and down.
Right. And that exercise on Saturday it's very well worth the 30 minutes
Yeah.
because I've been trying to utilize that and then work with some of those charts through the week. But usually I have a little bit of time in the morning, but during the day I don't. And then I usually get back on and I'll try to get on with you the last 30 minutes of the market day.
Yeah,
But
yeah.
I take my lunch break so I can at least pay attention to what's going on the last hour.
Yeah, yeah. Well, one thing that I found out, I use the word, well, you use the word fear, and whenever I hear that, I relate, and the best antidote to fear is small size. So if you're at all concerned, I remember once I was long, it was like 2,000 shares of VXX. Yeah, this was like 8 years ago or something, and I couldn't sleep all night because I was really worried that it was, you think worst case, well, it gaps against me $1, I'm down $2,000 and blah blah blah. So small, tiny size. How to say? You should trade at a size where it's doesn't cause any anxiety. So that, and what I found, like when I first started trading back in the '90s, 200 or 300 shares was what I started with. Now I only do like 40 or 50 shares, super small, so I don't really care one way or the other. If it gaps against me, it's not going to be that much money. And then if it starts to work out, then I can start doubling in. So swing trades, I always start off with under $1,000 worth of whatever it is. So 20 shares of a $20 stock is $400, or 30 shares of a $20 stock, 600.
Right.
So start really tiny, and that way you don't sweat it, no matter what it does. And then once it starts to prove itself, for the 20 or 30% that do, you scale in, and for the others that don't, you take really cheap stops. And that's if I could talk to my former self 20 years ago, that'd be advice I'd give myself is, and then I'd be skeptical. Well, how am I going to make money if I only start off with 50 shares? Well, the main thing is not to lose money. So that's number one. And then for the ones that do work out, you can then start to scale in every couple of points and build it into a more meaningful position. So if that helps,
It does. That makes sense. And I think part of my issue has been trying to put on too many shares at one time. And starting small is probably a better way to look at that and to try to work that in.
Yeah, because it doesn't cost as much when you're wrong. And again, something I mentioned too a long time ago, my most profitable year, I was wrong 72% of the trades. I was right 28%, 72, but really super tight stops on the ones that I was wrong in, and slightly bigger wins altogether on the ones that I was right in. So for what it's worth, for you and for anybody, it's don't worry about the percentage of wins, worry about the net dollars in and out. And so that means you have to start small if you're going to have small losses. So and the goal is to outdo the losses with slightly larger wins, and you only do that by position sizing or scaling once you're in the house's money. So.
Right, and that makes a lot of sense.
Cool.
Because I have been learning more how to do that just recently, so that makes sense.
Yeah, it's all. I wish I'd known all this stuff 20 years ago. The thing is, it's just a personal frustration is, my assertion is that most of the people teaching trading have not had a profitable year, or they do not do much trading, so they do not know the correct stuff to teach. And so everybody's at a disadvantage because it's like blind leading the blind, and people who don't know how to scale and all that kind of stuff are teaching us magic chart patterns when that's probably like number 4 on the list. The more important thing is the scaling, position sizing, the numbers. But people who don't know how to trade can't teach that. And so the general public, the traders, are not taught that. So I hope that helps. Yeah. So
yeah,
learn the hard way. Yeah.
Well, yeah, and trading is a process. Obviously, I figured this out over the years, and you learn little things, and keep the things that you think work for you or that you know work for you, and kind of filter out the rest.
Yeah. Now,
So,
you mentioned stock charts. My other favorite free chart thing out there is FinViz, and that's really good for scanning. So they've got the nice heat maps that are good. I don't know if you're familiar with it, but
what's it called?
FINVIZ.com is really good. It's free. It's really good.
Okay.
So those are my two favorite free stock charting websites in the world, stockcharts.com. I talked with Chip on the phone. He's a good guy, the guy who owns it, and FinViz, FINVIZ.com. And it has this heat maps, and it shows like big green or red and market cap size, and it's a good way, a visual scanner that's free.
Right.
So
I've seen the heat map. I haven't been to that website, but I have seen the heat map, and that's an interesting way to look at it. And I have to take a look at that.
Yeah, it's a good one. It's a good resource. Yeah.
Right.
What else? Yeah.
And I've been trying, you try to read more. I've read one of Nissan's books. There are so many books out there, trying to pick the ones that you think will help you the most. Well, do you do anything with options at all? Or have you ever done options?
No, I've looked into it. I know the top options guys like Price Headley and Larry McMillan and Tom Sazanoff, they're like the top three. But my head melts when I try and figure out options, so I don't do that.
At least
I bought all the best books on options, and I read through it. I liken it like shooting, and I think price is tough enough to get. When you have price and timing, it's like windage and elevation. It's too tough for me. So I might try 0DTE options just for like day trading options to buy index puts on selling days, but I think it's tough enough to get price right. When you have price decay on the strike and all that kind of stuff, I think that complicates and makes it much less likely to win than just trading the straight instrument with price. So for that reason, I have still yet to enter the world of options. I'm sure I'm missing out on something, but I like to focus on what I know, what I can do, which is price action trading. So
right, and at least I know I'm not alone, because I've read a little bit about options, and it's like, wow, I have very difficult concepts to grasp. And you're a smart guy, that's why I thought I'd ask you.
No, thanks. Yeah, no, I'm a statistician, and my head melts when I try and study options. That just gives me a headache thinking about it. Getting price action on stuff that's actually worth trading is the big challenge. That's enough of a challenge for me in my life to get that part right. To add it, to get additional leverage, and then add the penalty of you have to get it within a certain time frame. That I don't think that's a good bet, at least for my own personal approach. So yeah.
No, I would agree. So I was just curious.
Yeah.
So, trying to think what else. Well, I guess I know there are certain times of the year that are better than other times, obviously. I have a little more time in the summer, but usually the markets are not as active in the summer as they are in the fall and the winter.
Right. Yeah. Usually the first part of the year and the end of the year are the best times to trade. The middle, the worst. But I wouldn't worry about that. That has not been the case the last 3 or 4 years. The market's been plenty volatile all year long. So let me ask you, are there any specific breakout patterns that you favor when you're looking for your swing trade entries?
Obviously, if it's been in a base and it breaks out of a base, I try to look at charts where the stock is getting ready to break out or has broken out of that base.
Right.
I like some of the biotechs just because I like the space, but some of the biotechs are very volatile. And looking at some of those charts, you'll see them break out huge, and then that'll be the end of it. They'll have a long run, or they won't have very long run, that type of thing.
Yeah, right. Yeah, the best charts tend to be steady 45-degree angle runs. You mentioned base, and that's a good point. Like this one here, if we look at one of my favorite patterns is when it breaks out of a base, which one is a large green candle on the far right side, like that candle right there. So,
right.
You have a base. Make sure that you don't buy one that has a little tiny candle or two making a breakout high, because that's not enough energy. You want to have a large candle and then go long above the high of that candle. And that's a good, that would have been a good trigger right there. So,
right. And I sometimes get nervous when I'll see the dojis after a breakout like that. This one obviously followed through after the doji, but sometimes that isn't always the case, but
Yeah, yeah. And one pattern, let's see, one pattern that I favor is, or one thing that I found is very effective that nobody talks about, is just like the ratio, simple ratio of green to red candles. You want mostly green candles in the chart you're trading. And just remember that is in the back of your mind. Is it like here is a terrible time to trade this thing because it's chip chop, Christmas tree, green, red, that's pretty, but it's not going anywhere. Here's mostly green. So if you see 3 or 4 greens in a row, that's usually worth buying above that kind of thing. So just keep in the back of your mind, is this chart right now that I'm looking at more green, like 3/4 or more green than red candles in an uptrend? And it's simple, but that it works. I mean, that's one thing to look for.
yeah, that's a good point. I never really thought about that. Like I said, I've usually paid more attention to if there's a doji forming like that one down there towards the bottom, but then obviously this one has kept going up and it's had green candles.
Yeah, yeah.
That's
Another, yeah, another, let's see, another pattern to look for is trying to find a good uptrender here. Something that's gone up nice lately is look for the pattern of, we're trying to find one. We have a small followed by a large whole real body green candle, like maybe here. So it's like here and then a bigger candle in an uptrend. It's very simple, but it's a good pattern. When you see a small green candle followed by a large green candle on top of it, that's usually a good acceleration pattern to look for. So that's a good filter. Again, I like to keep things simple. You will never hear me talk about squiggly lines. I don't use MACD or stochastics or that kind of stuff. I just use pure price action because that seems to work.
Would you wait for the pullback on that one where the red candle is to enter the trade?
No, I'd buy above the high, so 20 or 30 cents above the high. Yeah, I always buy strength. I never buy pullbacks because that's kind of like a reversal of trend. Trying to find here. Okay, here's a perfect example at Disney, right?
Okay.
The Magic Kingdom is a small followed by a large green candle. You go along, say 20, 30 cents above the high, and you're good to go. Now, I see a big honking red candle. That's a warning sign, and a loss of support that tells you to sell. But small followed by large tends to run. So that's one thing that, for example, I would have no interest in buying Disney here because it's under the 100. That would be key, like major psychological resistance. And there's no big sign of strength. It's a slow grind up, but it's not strong enough. If you look at Apple, though, you may have, the Apple chart's been wonderful. This is a good example. Oh yeah, by the way, when using this is very important. When you use that small followed by large, ignore the shadows, the tails. It's irrelevant. It's the box, the size of the box. So here's like a small box followed by a green box of at least twice the height in an uptrend. That's a really good pattern. And you can see, I mean, I have not looked at the Apple daily chart in weeks, but I just pulled it up because I knew it'd be a good example, and it is, right? So small followed by large, small followed by large. Usually runs, here's another one, small followed by large. So whenever you see that pattern, that's a really good scanning visual criteria to use. So that should help. It will. It's a very good, consistent type of breakout pattern.
Right. No, that makes sense.
So I hope that's helped. There's so much to cover.
Oh yeah, but that's, every little bit helps. And like I said, it's taking a few ideas and using them on a regular basis to get used to using them and making them work for you. That's been the other thing.
Yeah. Just to keep the checklist of check, is it at least a million? Check, is there a large green candle at the right side of a breakout? Or check, is there a small followed by a large green candle? Check, is the range big enough to make it worth my while? Check. And then how do I scale in? And how do I start small? And just put that like a checklist of 5 or 6 things before each trade. And make sure it jumps through each of the hoops, and then you should be in good shape. So yeah.
Okay. All right. That makes sense.
Yeah. Thanks, man. What else?
Let me see here. I think I've asked most of my questions. I just, like I said, I try to listen to you much as possible and follow what's going, what you're doing, just to give me better ideas on how to make those trades work.
Yeah. It's the main thing is, go ahead. Yeah.
No, I was gonna say the concept of trading before market open is a little foreign to me, but I'm trying to learn more about that because I know you do a lot of trades prior to the opening of the market.
Yeah, but if you're swing trading, no, it's a swing trading. The main thing is the end of the market day. That's the more like 3:30 to 4. That's where I make my decisions on swing trades. Because you bring up a good point for day trades. Yeah, but for swing trades, wait until the end of the day, 3:30 to 4. That's where I scale up or scale down or put on the trade or not. So that's valuable intel too. Day trading always on the open. Swing trading, what matters is the close. And so if you're closing hot above a previous day's high, it's good to go. But if it closes, see, it could have gone up in the morning and sold off in the afternoon. You don't want to swing trade that. You want to swing trade strength into the end of the day. So that's something that's little known. But I learned this from the professional guys, the big hedge fund traders and all that. The guys who swing the most money. They say amateurs control open, professionals control the close, and that's why most of the big money goes into the market after 3:15 up until 4. So that's what we should do too for swing trades.
Yeah, that makes sense too. And I've heard the same thing. So
good. Yeah. Good stuff, man. And there's so much to cover. But I hope that it kind of fine tunes or gives you some like a narrower path to follow that's more successful than a wider, all the noise out there. You need to narrow it down to a real focused list of criteria, and hopefully that'll give some technical things and good pattern strategies to help make more successful decisions and put it in context. So.
Yeah, it does. And like I said, it's a good point, trying to narrow that and just follow, so many stocks during the week to see what, pick and choose what you want to do and how you want to make the trades work.
Yeah. And 3 or 4 or 5 is plenty. You don't need to be trading 15 or 20 instruments. Too much noise out there. You got to just focus down to a few that actually work. So.
Right. And it's too much to follow any more than a few. So
yeah. Very true. Yeah, let's see. Any other questions? Whatever I can help out with.
Trying to think. Let's see here.
Or sometimes, like, is there a trade that didn't work out for you, that like a CSI postmortem we could go through, or anything come to mind of a trade that you did that wasn't successful and it was frustrating, and maybe I can share some insights as to whether I would have traded in the first place, yes or no, or manage the exit differently or something like that. If not, that's fine, but I just thought I'd ask.
Yeah, I should have gone back to look and see. I'm sure I've had trades that haven't worked out in the past, and I usually try to go back and look and see what I did, or look at the charts to see where I made error, but I haven't done that as much, and have just been trying to do more of that. Like I said, the best trade I had in the last couple of weeks was the UVXY. Last week, I think.
Yeah.
And that was a good trade.
Yeah, and that one will do a lot more moving forward. I'm 100% confident of that. The neat thing is, it finally woke up. It's been now finally a spark. It's like a lighter. It's a spark. So that almost always leads to a nice big run up in the volatility instrument. So I'm aggressively looking for entries in this thing anywhere. Give me a reason, right? Anywhere over 5.5, 6, probably a really good play. So, but that's the nature of volatility. The other thing I mentioned so many times, because it would have saved me a lot of money and I would have made a lot more money in the past had I done this, is get out at the first sign of trouble, or sell half at the first sign of trouble and trail a tight stop on the rest. Don't worry about missing out on a big run. Worry more about missing out on the profit, because what goes up often goes back down, especially in today's markets, right? So, like I called near exact tops yesterday on the inverses. At the first, they make a letter A. So when it goes up and starts to pull down, get out sooner rather than later to lock in a gain for the winners, because otherwise it comes right back down to where you got in at, and that's not why we trade. So
right. Yeah. You keep your winners out. There's no doubt about that.
Yeah, faster exits than if I were to go back and redo my whole trading life, I would have given that as one of the top 2 or 3 things: is get out sooner than feels comfortable. My most successful trades are ones in which I exited and said, really, I'm out that soon? and yeah, that was the exact or close to exact top. And good thing I did, because if I'd waited, it would have dropped down a lot. So good exit should feel like, really, I'm out that soon. It's uncomfortably feels off, but it's out very frequently. That's the best, most profit you can get out of things. So it's a good exit.
Good. Right. Yeah, that's true.
Yeah. Well, we got a few minutes left. Anything else? Any last thoughts or any other questions for me?
Yeah. No, I tried to understand, obviously, some of the relationships, like obviously with gold going back up again. I some of the gold stocks are interesting to me, but at the same time, a lot of the price action in gold is due to what's going on in the financial markets.
Right.
And I still am trying to figure out some of those relationships. I trade coins, and so I try to follow the gold and silver market more closely than other markets.
Mm-mm.
But at the same time, that's another one that, is still, there's still a lot of gray areas to me. And I know some of those stocks have had good runs.
Yeah, well, as long as it keeps going up, we're good, right? So it's
Right.
as long as it keeps going, as long as the trend is continuous. That one, the other thing I found is that trends often run much further up or down than you would have thought. So, it's caused me to lose more than I should have for things that I thought it would stop selling off, but it never did, and it kept going down, and I let it go down, or I take profits too soon, and then it keeps going up without me. So trends
Right.
often run further than you think. So that's another lesson learned.
What do you think? What do you think of Nugget versus GDX? I know Nugget is the 2-to-1, I believe, opposite of Dust.
Yeah, well, I like GDX better because it's, and one of my Mick, the smart guy, he likes GDXU better because I don't like it because the volume's not very good,
Right.
but it's got better leverage. So the best, technically, he's right. The GDXU is the best leveraged instrument. You can see 30 to 48 on this. If you compare the GDX, so remember 30 to 48.
Right.
This one is only like 27 to 31, so much fewer points for your dollar. So GDXU, and Nugget is even worse with like 29. Well, that's okay, 29 to 40. Yeah, but that's one thing to look at, is the relative leverage you get. How far it runs, the same chart but different points. So yeah,
Right.
good stuff.
That makes sense too, for sure.
Yeah, I don't know if you. Yeah, I used to. I've got all kinds of gold coins and all kind of stuff. The Escudos, and I used to collect all kinds of rare coins from back in the day. But and now I just trade the stocks. But it's good stuff. Yeah.
Right. Yeah.
What else? But yeah, that's a part. Yeah.
So you've answered a lot of my questions, and at least given me some things to look at so that I can try to improve what I'm doing. Which makes a lot of sense, and it makes it definitely worthwhile to do this.
Well, thanks. Yeah, appreciate it, man. Yeah. It's good working like one-on-one like this, because then I can answer individual questions, and we're not all sidetracked by lots of people asking and having to be on top of the alert. So and now's a good time to do it, right in the middle of the day. So
right.
Yeah, appreciate it. Yeah.
No, I appreciate that. I appreciate your time. I think it's awesome.
Well, thanks, man. I appreciate it.
Yeah. Recommend it to anybody too that wanted to find out about it.
Well, thanks, man. Yeah, appreciate it. Yeah. It's I'm here to help. There's so much lessons learned. It's like you make every mistake in the book and then some, and then I try and help people not make those same mistakes, and focus on what's really important, because there's so much out there, so much so much noise. You want to get it down to the signals that work and figure out a strategy that makes sense. So glad it helped, man. Yeah, thanks.
Yeah, no doubt about it, and I do appreciate it.
Well, thanks, John. Appreciate it, man. Well, I'll see you in the room later, I guess. Well, thanks for doing the coaching session with me. I appreciate it.
Yeah,
you're the first one to do one with me, so thank you very much.
Appreciate it. You have a pretty large following. I'm surprised other people haven't taken advantage of it. I mean, it's an awesome opportunity, so I greatly appreciate it.
Well, thanks. Yeah. Well, it's been good working with you, man, and I'll see you next time. Thanks for being here.
Thanks,
okay.
Ken.
Thanks.
Appreciate it. Yeah.
Hey, man.
Bye.
Thanks. Bye-bye.